So let's talk about development finance. Why would you want to use development finance? Well, as a developer, or if you're becoming a developer, the development finance facilities are there to allow you to cover the construction and development costs. Now, it's unlikely that a development finance loan would cover the purchase of your site. And there are some lenders out there that will cover a percentage of the purchase, and then equally there are some boutique lenders out there that will even lend up to 100% of development costs. But for this video, we're looking at specifically traditional development finance. Now, some core points that you need to be aware of. I've got some notes here, and I've got 3 important facts and points that if you're going into a development finance loan or you're considering a development finance loan, you should be aware of. Now, the first one here on the list is that most development finance providers will only accept a first charge on your land or your title. So if you're looking at bringing in other people's money or private finance to fund the purchase of your site, you will not be able to offer them a first charge, because if you do, it will restrict you in the development finance market. So from day one, at an early stage, if you're speaking to people about raising finance, about private equity, if they do wish to take a charge on the land, you can only offer them a second charge, as you need to reserve that first charge for your development finance provider. What that also means, if you're leveraging and you're borrowing money to purchase the site through traditional mortgages, through commercial mortgages of some sort, and they want to take first charge, you really need to consider how you can manage the ability for a first charge from the development finance lender. So again, just have that in your strategy that any development finance loan would most likely to take a first charge on the land. Now, your broker, if you have one, might be able to find you a finance provider that accepts a second charge. But in my experience, I've struggled to find large levels of money from development finance loan that do not want to be covered by a first charge on the title. Now, point 2 here is that development finance is paid in arrears. So why this is important to you and what you need to be aware of is that we've all had that builder that wants to be paid weekly, that wants to be paid as quickly as possible, sometimes even in advance. Now, if you're operating in the commercial world of development finance, you need to pick your contractors carefully. You need to be aware that money is not going to be on tap from the development finance provider. You're going to be charged every time you draw down from that loan. So therefore, it's likely that you will only draw down on a monthly process via a monthly valuation. And you will have a project monitoring surveyor in place, a PMS, that will oversee that process and be the link between you and the bank. Now, that PMS is responsible for signing off on every one of those drawdown requests. And so they will want to check all of the information that you're giving to them, and they'll want to check that any money that's being released is going to the right place. So any deposit payments to contractors, any deposit payments or advance payments to your supply chain will need to be underwritten and checked by the PMS. Now, if you are planning to fund a deposit or fund an advance payment to your supply chain via your development finance loan, you will need to have in place a system so you can provide vesting certificates, so you can provide surety bonds, or that your subcontractor or contractors can provide surety bonds to underwrite and guarantee that money. So you may consider having a fund of money as a developer where you forward fund some of the advance payments and then draw down in arrears from the development finance loan. And point number 3 here on the list is entry fees, exit fees, and interest. Now, you will be charged most likely an entry fee or a setup or an arrangement fee, as you would with any mortgage or loan provider. You will also pay an exit fee, and you will pay interest when you draw down money from the loan only. So you do not have to calculate or worry about interest being charged on the full amount of the loan for the full term. Although if you are completing an appraisal and you want to allow some buffer in that appraisal and some risk management, then it would be wise to allow for the full interest rate calculated on the full amount of the loan for the full term. In reality, when you come to draw down your development loan, you'll only pay interest on the amount that you draw down and not for the full term of the loan. So if you're doing that monthly, interest will be applied to the loan. Now, quite a good feature of a development finance loan is the ability to roll up the interest until the end. So you will only pay the interest when you settle the loan. So you don't have to worry about bleeding on a monthly basis, paying interest out on a loan, as it will be rolled up and you'll be given the bill at the end. So it's quite a good feature that you can benefit from as a developer. So that's it. They're my 3 key points when it comes to development finance. I'll just recap on what they are. Number 1 is that most development finance providers want to take a first charge. So be aware that you cannot offer any other lender or any other investor in your project a first charge. Reserve that first charge for the development finance provider. Number 2 is that development finance is paid in arrears, so be aware of that and make sure you've got a system or process, a strategy for covering any advance payments, and make sure you brief your supply chain in advance, telling them that there is a bank loan in place that's funding the development, and they can adjust their mindset and their expectations when it comes to payments. And number 3, entry fees, exit fees, interest. Interest can be rolled up, and interest is only payable on the amount that you draw down from the loan at the period when you draw it down, and it can be paid at the end. That's it for development finance. If you need any recommendations when it comes to development finance providers or brokers, drop me a message in the comments and I can provide you with a couple of names of some brokers who may be able to help you. And if you want any more of this type of content, again, put some comments in some of the boxes below. Give us some ideas on the type of content you want me to open up about in the development world. I've been in the development business for 10 years, helped develop over £350 million worth of GDV value, and I am here to share my knowledge with you. So if you have any ideas for any future content, stick some comments in the box below, and hopefully we can help out and give you the guidance that you need to get your development career, project or site to that next level.